Hey everybody, welcome back. So today I'm going to be talking about a stock that is trading below $10. In fact, it's even below $5 from the drop last week. And the stock is not only cheap, it's also a very high quality stock. And I'm going to really just show you why I think I'm so bullish on the stock and why I think it's a great time to get into this company. Okay, so without further ado, the stock ticker I'm going to be talking about today is CPG stock. Okay, so Crescent Point Energy. Okay, so Crescent Point Energy is a oil and gas company based in Alberta, Canada. If you're ever interested in investing in the oil and gas industry, specifically, in a company located in Canada, not that the location really matters, but this is just really a solid company. I'm going to show you why. So first of all, the market cap on CPG is $3.31 billion Canadian dollars, but that's still a lot of money. So you can know that this is definitely not any pink sheet company that just started and doesn't really have a lot of money and revenue. This is a solid company. Okay, so taking a quick look into the Yahoo Finance, we can take a look at some of the financials. Right now, it is sitting at a really low P ratio of 1.44. Okay, that is insane for a price to earnings ratio. If we take a quick look at the financials, you can see that it's really been continuing to grow. It did have a little dip in 2020, but as you can see, this year the revenue has gone back up. And so right now, their profit margin is looking super healthy. Look at that. Right, last year they've been losing a lot of money, profit wise, but this year they are cash positive. They're making a lot of money in profit. Their EBITDA they're making is really high. So you know that this company is solid. Taking a quick look at taking a look at some of the balance sheets. Okay, so they still have plenty of assets, plenty of money in the bank. So this company is not really going anywhere. And so as you can see, their cash flow has increased year by year. There was a dip this past year because of COVID and all that's surrounding the pandemic. But this year we have seen some kind of recovery and a pretty healthy recovery. So taking a quick look at the charts right now, the Bollinger Bands does show that the moving average is trading right about a really good entry point. So this is not bad at all. The moving average has stayed around this area, and right now we're trading at almost at the basic middle entry point. Okay, taking a quick look at FinViz, we can see some other indicators that's helpful for us to know. The first thing I'd like to take a look at all these analysts upgrading their just their outlook on CPG. They definitely believe that it's going to outperform in both the sector and the market. Right now, the RSI, the relative strength index, does show that it's slightly oversold, so it is a good time to buy. Look at this. The earnings per share this year is down, but the earnings per share next year is going to be up a whopping 700%. Okay, so this is a stock you definitely don't want to miss out on because I'm just there's so much in the pipeline, pun intended, for Crescent Point Energy. Okay, going to our Robinhood account, I'm going to show you how I'm trading Crescent Point Energy. So the first thing you can do is you can simply buy shares, but instead of buying shares, you can simply sell a put. Okay, so you can sell a put, all the way out to July 15th if you like. So that just means that if the stock falls below, a certain price, then you would be put the shares. And right now, there's not a really good entry point for selling puts, because so sorry about that. Okay, so I have not sold puts. My apologies on CPG, but what you can do is you can buy call options expiring out into July. So right now you can open up a call option for CPG at $2.5, which is almost half the price of the stock. It would only cost you $203 to open up this contract. So it's not quite a leap because we're not opening a call option that's expiring a year more out. So it's technically not a leap, but Still gives you about 7 months before the stock for the stock to go up, and the stock really only has to move up about 2.49% to break even, because you're buying the stock in the money. So that's why I think this is a great time to buy. Like if you're buying a couple contracts at $200, you can probably buy 5, 10, just however much you're able to spend and allocate based off of your portfolio. But I do think this is a great stock to buy. If you don't want to do just call options, if you want to remain a little more conservative, you can simply just buy out shares, and that way you can hold on to that for as long as you need. Okay, so this is a stock that I'm definitely bullish on, and because it's gone down. I think it was down. If I'm not, if I'm not mistaken, it was down almost 6% as of last Friday. The last 5 days has been down 15%. And so if you take a look at the 6 month chart, though, it's actually been up about 5%. Year to date, it's been up 86%. So this stock is moving quite a bit upwards, but in the last month or so, it's been down quite a bit. So that's why I think it's another great entry point into CPG. Okay, so I'm definitely buying up more of this stock myself. Yeah, and so if you like this kind of content, if you want me to make more content like this, just make sure you smash that like button, subscribe, comment below if you have any questions. I'm always more than happy to help. And let me know what you think of CPG stock. Is this a stock that you want to have in your portfolio? Are you bullish on it, or do you think there's going to be other catalysts that could potentially be a risk factor for CPG? Let me know in the comments below. I would love to hear from you. Until next time, guys, I will see you in the next video.